No one in Japan is panicked. They are watching events unfold. I'm not sure we can say that is true about international investors and about American investors in particular. I noted one story at CNBC today that said that American investors had put about $1 billion into Japan electronic traded funds, exchange traded funds just last month, and that money's been shocked around. So I thought the guy I know watches the markets the most closely of anyone is Roger Schlesinger, the Mortgage Minute guy. He has to do so for the benefit of his clients, and so he gets up with the dawn and he watches markets go up, down, and all around. He joins me now. Hello, Roger. Welcome to the program.
Thanks, Hugh. How you doing?
Good. What happened today when the world, in essence, began to try and figure out what Japan means?
Well, if they tried to figure it out, they never came to a conclusion because the market sold off heavily, then it rallied back, then it sold off, then it rallied back, then it sold off, and it finished rallying a little bit back. But it was still off 50-some-odd points. The guys who could figure it out were the bond market because the bond market, which closed at 3.4 on Friday, closed at 3.34 today.
So explain to people who may not know what a 10-year bond means, what that tells us about investor confidence.
Well, it tells us that they're worried about everything in the world and they want to go someplace where they feel their money is safe, so they go to the 10-year Treasury note.
And so the more people want to buy it, the cheaper it becomes, the less interest they have to pay for it.
Right. It's the inverse of what you would think of when you buy bonds, interest rates go down. When you sell bonds, interest rates come up.
Now, oil barely moved, and gold went up about $3. So the big commodities also can't figure out what to do, Roger Schlesinger.
Yeah, well, there's some real confusion, Hugh, because here's the thing. We know there's going to be a massive rebuilding. We know that Japan needs money. One of the big things that they're trying to figure out is where is Japan's money. Now, my first guess was that I know they hold a lot of treasuries, but apparently they're not interested in selling the treasuries. They're interested in hanging on to those. So they're obviously liquidating money from other sources. The other problem for the world to figure out is, are they completely insured? Are they going to be losing a lot of money in this? And if they're completely insured, and nobody's completely insured, but if they have a great deal of this insured, will they be able to get it rebuilt in time? Because Japan really is about a tenth of the world's GDP.
Now, that's the thing that I was listening to some experts this weekend. In the Southern California region, Japan is by far the number one source of foreign investment dollars, by far, outstripping China and everybody else. They've got major corporate headquarters up and down the West Coast. And if all of those, if that country is in any way staggered, and I don't have a sense that it is, I just don't know, that will very quickly manifest itself in an already weak West Coast economy for the United States.
Yeah, it will definitely hurt us. And plus the fact is, I mean, we sustained some interesting hits, too. Up in Crescent City and other places, there was a lot of loss created by the tsunamis that came from there, and Hawaii as well. So, you know, we're not completely in the clear. We're not certainly hurting as much as them. But I think the best thing that we can see so far is that Tokyo, which is the heart of everything, is in pretty good shape.
Now, the 10-year bond that you mentioned, this is an American Treasury bond. It's on which all of the interest rates for like mortgages and home equity lines of credit, they're all based inevitably on the 10-year bond. It's at 3.347 at this hour. Give us some perspective of what that is historically.
Well, historically, the Treasury, the 10-year Treasury is around 5% historically. We got into the high twos, and my memory fails me if we got to the middle twos, but we were in the high twos when last year, late in the year, when we hit the 40-year lows. And then we started moving up, and we did get very close to 4. And now we're back into, you know, what I would consider the low threes, where Treasury rates signal the fact that we are going to have good mortgage rates.
Now, I also posted at HughHewitt.com today an email from John Campbell, who serves on financial services, a frequent guest in this program, and he's pointing out that all of the short-term debt in the United States, like 40% of our trillions and trillions of short-term debt are held in very short maturities on the T-bills, and that he's afraid that when it comes time to refinance this stuff, that's just not going to be possible, Roger Schlesinger. What do you think?
Well, yes, if everything gets going the way it is, or if we don't start balancing our budget and inflation, you know, takes hold, we have to raise interest rates to try to stop it. It'll be very difficult. One of the things that I've never understood is when rates get as low as they do, why they don't push more 30-year notes out there instead of the 1 year, the 2 years, the 5-year notes.
Yeah, Campbell writes the 2-year Treasury note is at 0.645, or about 2/3 of 1%. The 10-year, as you pointed out, is at 3.4%, or a little bit lower. The 30-year is at 4.55%. The steep yield curve tells us one thing: inflation is coming. But I don't know. Honestly, Roger, I don't think I've ever looked at markets and been this mystified, and I think it's because there are so many unknown factors.
Well, you have to add the big one, and why the stock market's been doing so well is the QE1 and QE2, where the Fed went in and started putting enormous amounts of money into the market by buying the treasuries, by buying the mortgage-backed securities and giving money to the banks so that they could lend it out, and mainly to Wall Street because it wasn't going to the mortgage market.
So how long does this last? The interest rates are very low. People can borrow money. I'm sure your phones are ringing at mortgageminuteguy.com. By the way, Roger's number is 877-304-4844, 877-304-4844. How long does this last?
Hugh, that's the $64,000 question. Everybody who's in the stock market now is betting that they'll be able to get out before the Fed starts draining the swamp of all the excess dollars in there. But when we have a Congress that may or may not want to balance this budget, may or may not want to start cutting the debt away, when we have European countries that are being downgraded, when we have the Middle East that's exploding the way it is, when we have Japan who has its problems, how do you know? How do you know?
Now, I got to ask you one question. You will not know the answer. This is pure speculation because it's too soon to tell. You obviously do refinances for a lot of people who live on the coastal parts of the United States, especially the West Coast, New York, Florida, all these coastal areas. I'm curious, do you think this is going to impact the way that real estate is appraised?
No, nothing can impact the way real estate is appraised because it's not appraised correctly today. But here's the biggest thing, Hugh. The big question is the San Onofre nuclear plant.
Yep.
There's 80,000 people living in a very close proximity. Do you think it's really going to affect that real estate? Because that's some of the finest real estate in America.
Oh, it is. It's where President Nixon chose to put his Western White House, in fact.
Right. So do you think that's going to get affected by it? I don't.
That's interesting. I'll be interested to know what your appraisers tell you after another 3 months of this, Roger, because you'll be getting them in. Thank you for joining me. I just like the clarity, even though it's just been a wild day. I appreciate you taking the extra time, Roger.
My pleasure. Thanks.
877-304-4844 if you want to connect up with Roger for all of your finance needs. He knows this mortgage market like nobody. He also knows the other markets as well. 877-304-4844.